I've paid thousands of dollars in courses to learn what you're basically teaching on your podcast for free. What you're putting out there is so valuable. So, I just really want to acknowledge you, and I definitely send everyone to your podcast.
You were virtually one of the first mentors that I looked up to and started following. You're always one step ahead of the game. So I just wanted to give you kudos and props for that, because lots of people are watching, lots of people are learning from it.
Tucker and the whole TTM crew, Dan and Chris, thanks so much for your support. I love what you guys do, and a huge, huge fan. Having this support's huge. So I'm grateful for that.
What's up, everybody out there in listener land? This is episode 237 of the Real Dealz podcast, and as always, I am your host, Tucker Merrihew. I want to thank you guys for joining me for what will be an episode that I know you guys are going to dig. I got a real special one for you this week. I'm cruising around here in my van this morning on the way to the office. Figured I'd knock out an intro for you guys and kind of set the table for what you guys are about to hear, which is an awesome interview with a gentleman that I actually met at the Big Badass Wealth Expo up in Seattle, I guess Bellevue actually, a number of months back that Tarl, who has been on the show, put together. It was a big event, and we had a VIP dinner night, and it was a cool event. Basically, everybody, I don't know, there were probably 20 tables or something like that, and a bunch of people, and it was all the speakers and a number of people that were kind of close to the speaker crowd, and then some people that kind of bought tickets for the VIP dinner. And so we sat at a table, myself, Dan, Artem, and then we had no idea who else was going to sit with us, and as it turns out, there was a few people that sat at that table that ultimately ended up being on the show, and this week is one of those folks. And so this week we have a very special guest who actually drove down here from Seattle. So we did an in-studio interview, which is basically my office. We'll call it Real Deal Studios, right? My office. And I feel like that really created a very solid product for you guys to listen in on, because what we did is we essentially just talked all things real estate. And the individual that came down, his name is Marc Erickson, and he's not only an investor, he's been in the game for a long time, but he's also a real estate educator with a company called Springboard to Wealth. And his partner Thatch, which many of you guys may have heard of or followed, he's one of the parts of that business. And so they run a large education company that educates agents on the power of investing in real estate. But he's also an investor himself, and he understands a ton about development, marketing, and everything else. So he's very far along in his journey in terms of understanding. He understands the money side of the game because he's brokered a lot of money and lending. And so we have a very high-level conversation just about real estate, climbing the real estate ladder, utilizing real estate to build wealth in different ways. I guess I should say build income, then build wealth, because that's kind of the progression of what real estate is for. So it's a really cool conversation. It's one where, we kind of navigate all kinds of different things, but you guys get to be a fly on the wall of me just kind of putting my thoughts about real estate out there, and him doing the same, and doing that at a very high level. So I think you guys are really going to dig it. These in-person interviews, they really have a more personal touch, and it just allows you to go deeper. It's just a more personal feel, and ultimately I think it creates a better product, and so I know you guys are going to dig it. So that's this week's show. But before we get into all of that, I want to mention a couple of things. Number one is our housekeeping items. Our Driving for Dollars app. If you have not already, make sure you go download it. It's a 5-property free trial. It's free to download. You can give it a test drive, and if you like what you like, which I know you will, you can purchase the monthly subscription, which is $19.99, and you can build as many lists as you want, and you can build as big a list as you want. And so we use it each and every week. I send Chris out one day a week. He goes out, he expands our areas with a new list of generally hits about 200 to 300 new properties a week, and from that we then run our direct mail campaigns, we run our ringless voicemail campaigns, we run our text blast campaigns via Roar. If you haven't listened to the episode with that, go ahead and make sure that you do that. But Roar is our provider that we use to do all of that, and it's been working out fantastic. We've been swimming in leads lately because of it, with all the layering strategies that we do with their technology. So, but the point is, go check out the Driving for Dollars app. It's the blue logo. It's the only one that's going to say Driving for Dollars. in the iTunes store or the Google Play Store because it's trademarked and nobody else can do it. And if they are, they're going to get in deep doo-doo. So make sure you go check it out, and it's free to download, so give it a try. Number two, or the second thing that I want to talk about here real quick in housekeeping items, is we launched a new show. And the new show is called the House Flipping Golden Nuggets Podcast. And what we've done is we've taken all of the best bite-sized pieces of content from this show over the years, which has been almost 5 years now. And we used to do a segment called the Golden Nugget, which is basically very potent, important information that we had little 5-minute segments on. And we've taken the best of those, and we're also going to create new ones. And we've created an entire podcast around it. So basically, we have 10, 15-minute podcasts that are much easier to consume. They're bite-sized. These shows generally run about an hour, give or take, and so they're longer in format, and that's the way that we wanted them to be. But we realized that, some of you guys may want more bite-sized versions so that you can take the information and make it more actionable much quicker. And that's exactly what the House Flipping Golden Nuggets podcast can do. So go check it out in the show notes. We'll make sure that we have a link to it. We'd love to have everybody that listens to this show go subscribe to that show so we can get a nice bump in iTunes. And, hopefully then people that find that show will ultimately find this show, because this is the kind of flagship show, and that just kind of is a little piece of what this show has to offer. So make sure you go subscribe to the House Flipping Golden Nuggets podcast. It's got the same logo as the Real Dealz podcast, our new updated logo. It just says House Flipping Golden Nuggets podcast across the front of it, and I know you guys are going to dig it. Now, before we get into the interview with Mr. Marc Erickson, a couple things in terms of what's going on with me and TTM over the course of the past week. For those interested, I'm still driving my van. I actually drove Mark around in it. I explained to him ahead of time. I said, you know what? I like driving this van. And I know it sounds crazy. It's a work van, and I had a Super Mac Daddy Audi Q7 that was supercharged before this. But there's a weird feeling about driving this van that it's hard to explain, and he got in it and he agreed. It's kind of cool. Feels like a spaceship. So anyway, update on that front. I'm still driving the van. But beyond that, and more importantly, we got a lot of leads going on. One in particular that we inked this past week that was a tax default deal. And a little takeaway from this. I've never been one to want to send marketing that is kind of scare tactic marketing. And I know there's a lot of people that do it. There's a lot of postcards out there that say, this is your third notice. If you don't contact us, the sky's going to fall. Somebody's going to take your house, something to that effect. And so this particular deal was a property that we've been marketing to for a while, but this gal had gotten a number of other pieces because she was on the tax default list, and so people sent her pieces saying, look, you are going to tax foreclosure, you are going to lose your house, you need to call us immediately. And she didn't like that approach. Go figure. We'd sent her something, a little different sales copy on there, a little different mail piece, and she liked it. And so she called us over all of the competition. We went there, we gave her our number, and it ended up being a smoking deal for us. She accepted it because, of course, her back was against the wall. We basically had to call the county. We had to freeze the sale. We had to show them proof of a transaction. We had to clear title. We had to work on some judgment stuff. We had to do all the things that you have to do as a good investor in order to make sure that you get a fantastic deal done, which we're doing. But bottom line here is that you don't have to market with scare tactic marketing. And I know it's gimmicky, and I know people say, yeah, Tucker, but people call. So, the proof's in the pudding, right? I guess I shouldn't say the pudding, right? Bill Cosby reference. He's not such a good guy anymore. But anyway, the proof is the proof, right? People call, and that's what it is. Well, maybe they do, maybe they don't, but at the end of the day, it's about how you run your business. It's about the brand that you want to create, and that's just not the brand that I want to create. That's not the type of marketing that I want to do. You can make the phone ring creating good marketing and not scare tactic marketing. So that's what we do, and that's how we got this deal. And this deal is going to represent at least $50,000 to us if we flip it out quickly. And, so there's a $50,000 lesson for you guys. A couple other things. Number one is it was tax week for me. Got my taxes done. Last week I told you guys I was like Jason Bateman in Ozarks with my head down, working on the books all week, trying to make everything look pretty for the IRS. And then I went in and I did my taxes with my CPA, who happens to be my old college roommate. And I'm going to do a future show on this because I think it's super important. And we talk about it a lot in the interview with Mark. But real estate serves a different purpose as you continue to climb the ladder, as you continue to grow as an individual, as a business person, and you grow your net worth and your ability to earn income. Initially, real estate starts off as a way to generate income, pay bills, put cash in your pocket, be able to have some of the niceties of life, pay off your house, things like that, right? Then eventually, you want to build some assets, some long-term wealth. So you start buying rental properties, and those rental properties eventually will pay down, and you get cash flow, and so you get basically cash flow every month without having to do anything. That's a great advantage. But the other big advantage, and there was a New York Times hit piece all about this, which I don't really want to dive into because I don't want to get into political aspects of it because it has nothing to do with politics. But eventually, as you grow and your earning power increases and your ability to generate earned income increases, which it should as you get better at this business, you need a way to offset that income. And the best way to offset that income is via a massive amount of depreciation deduction. And you don't have to cook your books, you don't have to do anything funky, nothing like that. It's completely legal. So anyway, long story short, I went to do my taxes this week, went to go sign the, tax returns with my old college roommate who's CPA, has been for the business for as long as I've been in business. And he was talking to me about a client who basically was able to show a $2 million loss. This guy's obviously a little farther along his real estate journey than myself, but he's got a lot of earned income every year, but he was also able to create a $2 million loss. And I was like, how the fuck did he do that? And I know how in theory, but I wanted to see it in application. And so sometimes it's a good reminder to see these things in person. And so he showed me, and he showed me what he bought, and he showed me how he depreciated it, how he did a cost segregation study on a number of the bigger complexes that he bought, and how he did some accelerated depreciation on some of that. And so I'm going to do a show all about cost segregation studies, what can be depreciated, how quickly, what can be, depreciated faster over a shorter period of time, so that you can take that deduction against income in years that maybe you have, more income. And you can also carry those losses forward in case you have more income the next year than the current year. So there's all kinds of really cool stuff there, but it was a reminder to me that ultimately we all should be trying to build a business that generates cash, build a business that then generates cash flow, and then build a business that holds large assets that basically allows us to minimize our tax burden or completely eliminate it. In this guy's case, he created a $2 million loss, of which some of that will be offset with his income, but some of it will carry forward for the next couple of years. So he basically is going to be tax-free on a federal level for a couple of years moving forward, or maybe even longer. So it was a good reminder, and it was a topic that I know last week's show was about taxes, which is why I wanted to mention it, but it's a topic that I'm going to dive into even further and talk about more on a future show. But that's the other side of the rainbow. That's where we all ultimately want to get to in this real estate game. We want to be able to earn income, we want to create cash flow, and then we want to create a tremendous amount of depreciation that we can ultimately offset all of our income from our earned income activities or our daily business activities that generate income at the most highly taxed level. So anyway, long story, but hopefully you guys got the point. Last but not least, we've got a ton of construction going on. We've got another house going to hit the market end of this week. By the time you guys are listening to the show, maybe the beginning of next, something like that. But the house that is going to hit the market, it's a $1.6 million home. And it looks like we may have pre-sold it even with the market softening. There's a lot of stuff sitting out there right now. The home right next to it we sold in 48 hours. This one we may sell in 24 hours. So collectively, we may sell two multi-million-dollar homes in less than 72 hours, which I would say is a hell of a feat right now given the market conditions. And I think it says a little something about our abilities and our brand, that's for sure. We're heading into a time where there's a lot of people that are swimming naked. There's a lot of people that aren't really providing true value to the market, and they've been getting paid for it regardless. And that's going to change. And so if you can't provide true value to the marketplace, it's going to be a lot harder for you to earn income and, basically be successful in this business moving forward. So keep that in mind, folks. As the market softens, the pros do well, the amateurs go home. That's kind of the way it works. So that's pretty much everything that's notable that's going on with me and TTM over the course of the past week that I wanted to mention. So without further ado, let's get into the rest of the show because I know you guys are gonna dig it.
All right, Real Deals podcast listeners, I want to talk quickly about our show's sponsor, Iron Bridge Lending. If you guys have not reached out to Iron Bridge already to talk to them about funding some of your upcoming flip projects, I highly encourage you to do so. I've known the owner of Iron Bridge for a very long time. I personally borrowed millions of dollars from them over the years to do a number of different projects, and I can say without a doubt, they are the best hard money lending company I have ever come across, and that is the reason why they are the sole sponsor of this show. I've had a lot of other companies reach out to me and want to sponsor this show, but I just won't do it. I feel like I need to be genuine in who we have sponsoring the show, and it needs to be somebody that I've personally done a ton of business with. So I personally vouch for their ability to be the best, hands down, in the world of hard money lending. You won't find better programs, you won't find better terms, and they're lending or will be lending in over 20 states. So chances are, if you're hearing this in whatever state you're in, it's definitely worth it to check out their website, reach out to them, see if they're lending in your state, and if they are, I would absolutely encourage you to do business with them. Another very cool thing to note is that they have a program for most rehabs where you can actually borrow up to 90% of the purchase price. Now, this is given the fact that you are actually buying a deal, which if you're listening to the show, that means you probably are. But if you have an actual deal on the table, they'll fund up to 90% of your purchase price, and they'll even give you rehab funds on top of that, which means that it only takes 10% down to get into a project, which is unbelievable in the hard money world. So do yourself a favor, reach out to Iron Bridge Lending, have a conversation with them, see if they're a good fit for you and for your next project. I can guarantee you that you'll be happy that you did.
We're set up to do higher margin, less volume. That's just the life that I like, the business that I like. And really, honestly, it's if you're gonna do higher volume in Portland here, it's so freaking competitive that it's like you're gonna have some duds, you're gonna have some real skinny deals. Like it's one of those markets. It's funny because we've got this high-end coaching program now that we're doing with people, and we've got different markets where we're basically intimately involved in their businesses, right? And it's become very obvious that it's much harder to do high volume in these equity hot markets like Seattle, Portland versus like an OKC or Cincinnati or something like that, because you have multiple ways to look at a deal more often in those markets than you do in ours. In ours, it's, the numbers don't make sense a lot of times for like the rental type game.
No.
And so it has to fit in one box, which is fix, flip, redevelop, somehow create equity spread, right? Versus, can you create cash flow, depreciation, whatever.
Yeah.
It's a lot easier to gain traction and do a lot more deals in those non-equity type markets because there's just so many different types of deals that you can do in comparison, I've noticed. So
I never really had appreciation for the challenges in, I'll say, the Northwest and the Seattle and Portland markets until actually talking to Tarl about it a little bit and his experience of like doing stuff across the country when he was in preservation. And he's like, dude, if we figure it out, like if you get a model that works here, you can drop that model kind of anywhere and do it. But there's so many, whether it's environmental constraints here or market velocity constraints or just the sheer level of competition that's here, it's really difficult. You really have to know here versus going to a different market. And you can drop into a market where 10 to 16% cap rates are everywhere, and it's like, yeah, dude, that opens up a whole other world if you want to be a buy and hold buyer.
Yeah, it does.
But these high velocity markets, even we work with a fair amount of people in LA, like Orange County and LA County, and and it's different down there. It's good velocity. The property prices are so high, it's hard to make rents pencil. You've got to be in either the value add is flipping or adding density, development, redevelopment.
I've seen some of the numbers down there. A buddy of mine, Artem, is doing an insane amount of projects down there, like high multifamily numbers. They started with 8, 6, 8, 10 units. Now I think they just did a 43 unit, something like that.
It's a big project.
I mean, I've seen the numbers on those, on the valuations. It's fucking insane. It's crazy. But they also have insane rents that, allow for these valuations. So, our rents are high. Your guys' rents are high. Theirs are, off the charts high. So, it's like this exponential multiplier of valuation that it allows you to do. But so we're a little bit constrained here because, we looked at a project. It's been on my desk for like 4 days, and it's like could be a fourplex or 4 like townhomes that we build, right? And like I'm looking at it, and it's like I don't know, it's about the same either way. It's not amazing, but it's like, I don't know, I feel like if it was in a different market, it would be like a no-brainer. So it's kind of tough because we're pegged at like that $1,800 a month probably rent for the units that we can build, where that same, construction cost and build in LA would be like $4,800 a month, right? So it's like now all of a sudden, somebody probably wants a little bit more for their dirt, but it opens up the ability to do that project. So anyway.
It's interesting learning all the different markets. I definitely appreciate my time in Portland and having to come down to learn this. Like going from remodeling to development in Seattle to coming to Portland to learning a whole new market, land use, where are the opportunities, has helped me a ton in learning other markets in other places. And like,
so how did that happen? I mean, we'll go into some of the questions I have just to kind of guide our conversation. But how did that happen? Like you started up in Seattle. You got, I guess, Green Canopy. That's the company that you're a part of on the, we'll call it the sticks and bricks side. You started up there. How did that morph into you coming down here? What did that look like?
Just going back to starting with Green Canopy, which isn't the beginning of real estate, but starting with Green Canopy, I got hired to be like the acquisitions guy for Green Canopy when we first started in 2009. So I was one of the founders, one of the first couple people in, and we were going to do energy efficient built green flips when that was just kind of new.
Was there anybody like playing the game?
Not programmatically. A couple people had done it. I mean, just
in general, because I remember 2009 here, it was crickets.
It was tough. We knew the opportunity because we'd been around the space for a while, and that. So we knew it was there. We wanted to put that niche on it, but deals were just like everywhere. Deals were nowhere near a problem in 2009. Like you could just. Our first deal, they gave me the green light like October 1st to find a deal. I didn't even go direct to seller. 3 days on Craigslist, I found one. 2 days later, it was in contract, had the financing put together. All that was done. So got our first couple projects, and the model was to build a fund to buy them, do the built green renovations on them, hold them for 10 years, and then sell out of them. But the capital market was a little tough, so it was tough to raise funds for that. Everybody was scared of real estate at that point in time. The bottom's never going to come. It's never going to bounce back. So we did a couple of deals like to prove the concept, but couldn't get the traction that we wanted, so we couldn't get the raise done. And so I jumped out from that because they didn't need me to buy the volume of deals that they wanted.
If you can't raise the money, then you can't get the volume.
Yeah, we knew the CEO was deeply involved in residential lending. His family had owned a bank. The other founder was an appraiser, so they had great real estate networks, knew the space, knew how to do it. We only needed me there to do volume. Otherwise, they could manage what they were doing. So I went and worked for a couple other funds, some groups that doing acquisitions, ended up in project management, all that. Green Canopy eventually got big enough that they were doing enough remodels. The acquisition side got big, so they brought me back in to oversee the acquisitions, get everything underwritten through feasibility, and was supposed to be doing some sourcing, which is what I really like to do. Like I'm a deal junkie.
Right.
So when I came back,
aren't we all to some extent? Yeah.
Yes. When I came back in, they're like, oh, we're going to start doing development because we're seeing development deals. So that's how I learned.
Okay, so they pivoted then from just your typical fix and flip, adding some green components to, okay, let's scrape it, let's redevelop, let's start looking at zoning, let's do some partitioning.
Let's start doing double lot deals, let's start tearing down houses, let's start doing townhouses.
When was this exactly?
That was 13.
Okay. So that was still ahead of like the extreme valuation of that dirt. Like there still wasn't a ton of value being given to the zoning.
No, we were still on the low side of that. Though Seattle, really the townhouse model was pretty big in the 90s and got big, then got crushed. And then like the .com crash put a little kink in it and then came back a little bit, then crashed again. And so when they rotated to that, they rotated because they were seeing the opportunity, and a couple of things lined up. The permitting timelines in Seattle got way different. We used to be able to get over-the-counter permits. We would do ground floor additions. We would do second-story additions. We could walk in and walk out with permits. When the city changed their interpretation of that, we had a bunch of projects get stuck and go from over-the-counter to full intake. Then we're like, well, if we're doing full intake work, might as well do new construction.
How long did that full intake take?
Full intake then was like hyper fast compared to what it is now. We could get in and out in 3 to 5 months with a full intake.
Okay.
And now it's like 6 to 10
Yeah.
to just for a single family doing new construction. I know guys that have had projects and permits for 2.5 years. It's just,
But guess what? You're looking at one.
it's brutal, man.
Yeah.
And that when I came to Portland, I was like, it can't be as bad as Seattle. Little did I know. But so Green Canopy rotated, so that's how I started learning the land evaluation and what to do, and mapping out site plans and learning the land use, creating the floor plans.
Gotcha.
And
So did they have you looking for opportunities then as well, or just simply looking at what is in the pipeline and how to best kind of redevelop it?
when I came in, it was getting up to speed on the pipeline, and then like let's see about going direct to source a little bit. That was my thing. Like direct to seller is what I like doing. What they had learned, because Green Canopy was really, it's an impact driven company designed to scale and sale. So they wanted to leverage partners, which was real estate agents. Like they're experts in the space, they're already working it, they're getting leads. Let's just tap into that vein to get lead flow coming to us, like wholesalers in the off market space. So then it was my job to like train a lot of these real estate agents. Yeah, you've got an address, but this isn't a deal. They didn't know how to underwrite. What is a deal? What is an investor or a builder new? So working with literally hundreds of agents who were sending deals, I'd see 20 to 50 properties a week.
So your job was to build those relationships and kind of cultivate the agents so that they knew essentially what to send you.
That's right. What we're looking for, and then find agents who were good at it and go become a top buyer for them that were already working with other guys.
It's kind of like
building.
Renaissance's model a little bit, to some extent. I mean, they don't do as much actual cultivation. They just have kind of built those relationships over time with a lot of people, but that's kind of what they do.
Yeah.
We've done that to some extent. It's worked out well because we have our local show here as well. And so we touch base with every agent in Portland once a month via email, and it used to be, if we didn't have the show, it would be, fuck you, quit emailing me. But because we have the show and now so many people listen, they feel like they know me, just kind of like, same as like this type of relationship, right? It's amazing how many people email back. They're like, hey, check this out. We've got this, we got this. So like literally on blast days, Chris has like, I don't know, 100 leads to sift through. So it can be a very powerful thing. I guess that's my point. If you have that personal relationship, you guys did it by beating the streets and kind of building a relationship. We kind of leveraged it by creating the podcast and kind of building it, from afar.
Yeah, and that's being able to have the relationship in a venue that's outside the direct just deal conversation was a really powerful tool. And what we did, we put together like clock hour classes or non-clock hour classes to talk to people about building green construction, adding density, how to do remodels, how to message it, and not greenwashing, but like true deep green. Like here's how to manage air changes, here's like solar hot water, all kinds of different stuff. So we're delivering value to them through that and deepening the relationship, so then they're sending deals. But the real problem was, like you spoke to, they send 100 deals, now they expect something back. We want to have a good brand in the marketplace because we want to expand and then get sold, have a liquidity event at some point. So we want to have good reputation. So now we got to get back to the agents intentionally and do a lot of coaching and training around, here, this one's not a deal, here's why, here's what you need to do. So it was so much like evaluation work for stuff that wasn't deals. It was challenging, but that's what led to what my main focus has been the last 2 years, was seeing that gap and that opportunity.
Were you guys giving them list backs as kind of a secondary form of motivation? We'll call it? Okay.
That was a big part of it. We handled the list backs, either direct list backs, or we would have some agents that just weren't that interested, or maybe didn't have the requisite skill set to sell out an 8 or 10 unit project. Because it's one thing to be good at selling a single family one-off, it's another thing to try to sell 10 of the same thing in a strategic fashion, just to protect the price, to get out on a timeline, because we're using hard money, in essence, our own fund at Green Canopy, to provide the leverage, but it's hard money pricing. So you got $4 or $5 million in debt service, you need to get away from that because it's eating your profit quickly. So some people we would buy out early, reach an agreement and buy out early, and then bring in a team that
Okay.
could effectively sell.
Gotcha. Yeah, that makes more sense on those big projects, especially when you're talking 5+ units, and
Yeah.
you got to protect price, and you've got $4 or $5 million of debt service exposure that you've got to manage, which I know because I sit in that seat. So it's that's interesting though. So then now, is that your main role then, is cultivating those types of relationships in the lead flow, or what is it that they have you doing now?
No, so I'm not involved in the day-to-day with Green Canopy. I'm still a shareholder,
Okay.
still do stuff with them, still send deals to them, but I'm not in the day-to-day. I again, being a deal junkie, I was like, man, I want to be more on the deal side, not just the underwriting side. So when we got stabilized and they had great deal flow, had learned the space, had put great construction systems and processes into place, it's like, you don't need my skill set to do this. You need more somebody to just get stuff in. It gets handed off to construction for feasibility. They need to be able to vet at a high level, but not a deep skill set. So I was running sales and acquisitions for them at that time. So we created kind of a couple positions, backfilled myself in those, and then went on because I wanted to get back in the deal flow side. And I really have always liked the coaching and training aspect since I was a kid and coaching my little brothers.
Mm-hmm.
So I had seen the gap in the marketplace, being before Green Canopy, being a wholesaler, loved that side of it, knew what they did, but saw agents didn't have the skill set. So I was like, man, I'm just going to find some agents that want to be in this space, and I'm just going to work like a small group coach and teach them this space, take a piece of the deals, help them sell the deals, get them placed. While I was making that transition, I met my current partner, Thatch, who you might have met at the event that Charles did, the Badass Expo.
It's hard to miss that.
Yes, he's quite a character. It's been great getting to know him and getting to work with him. He and I were talking because I was like, he could be a good buyer. He's doing a ton of deals, so we got together and he's
Right.
like, what do you want to do? Well, I'm going to go find some deals and I'm going to find some agents and teach them. And he's like, dude, I've been trying to figure out how to do that for 3 years, but didn't have somebody with the right skill set and with the right kind of integrity that he wanted to partner with. So we had a couple of conversations and we created the new company Springboard to Wealth, which is geared towards teaching those strategies and philosophies to real estate agents. Anybody who wants to be investors can learn it. Wholesalers, agents, similar space, but our main focus is real estate agents, to teach them how to work in this space, work with investors, speak the language, understand deals, so that they can be their own investors ideally and really create passive income to get out of the rat race, so that they can work because they want to and not because they have to. Don't buy yourself a high paying job. Get the freedom that you got into the
Right.
business for,
Okay.
using this as leverage.
All right, I
to
get
get
how it
that.
all comes together now, because I do agree with you. I think that's a giant void in the market, because I've been bitching about it for 15 years, but they're the typical real estate agent, and it's not bashing agents, but it's just
No.
the reality of
Yeah.
life. The typical real estate agent knows zero about the actual product that they're selling.
Yep.
And there aren't many industries where you can literally know zero about the product that you're selling
Yep.
and sell it and make the types of commissions that they make.
Oh yeah.
I have not found another one.
No.
You won't go find people that sell jet aircrafts that know nothing about the construction or the functionality of a jet aircraft.
Yep.
And they're probably making the same types of money, in commission sale type
Oh, yeah.
basis, right? But people go sell a house, they have no idea about anything. And it's crazy. And not just talking construction side, but then on the investment side too. I mean, there's 3 different kind of sides, right? There's your retail, look at a house, I like it, it touches me emotionally, let's
Yep.
buy it. There's the construction side, what are some of the selections, construction that's been put into this house
Yep.
that makes it either superior or inferior.
Yes.
And then, of course, there's the investment aspect. Is this a good investment? Should I be spending the same for a house that sits on a double yellow busy road as one that's, 4 houses in, right? As an agent, should you give your 2 cents? And most agents don't.
No.
Because, number one, they don't know. They just don't know. So I think you're right. I think there's a big void in that space.
It's in the agent training and licensure. There's such a low barrier to entry. Take the clock hour class and get your license, and it teaches you contracts, right? You know how to fill out a Form 21 or whatever it may be. There's very little sales skills incorporated into real estate agency, and there's almost no real investment analysis. I mean, we just did a live event in Bellevue for 3 days, a 3-day training, incorporated site tours, took them out to see, feel, and touch active construction sites, broke down the numbers, But it blows their mind, and where most of them operate, we show a graphic that's an iceberg, right?
Were these all agents then?
It was almost all agents.
Okay.
There were some wholesalers. Tarl and the fixated team were there, but mainly agents, some investors, some hard money guys were there. They operate this iceberg graphic that we show where the piece of the iceberg above is typical real estate. That's what most like civilians and most real estate agents know.
Mm-hmm.
Put a sign in the ground, put a buyer in the car, go do a deal on the MLS.
Find a house that speaks to me, write an offer, right? That's it, yeah.
That's what most of them do, and that's what most of them send to their investors. Hey, this deal just came on the market. The agent put keyword investors, keyword builders in it, so I'm sending it to you, but they don't have any context about like what is actually valuable, what are we looking for, how to structure a deal, and they don't get the creative structures, and that's what we talk about in the piece that's under the water. Like 90% of the power of real estate is the stuff that's under the surface. The value add, seller carries, lease options, good structures, BRRRR. There's so much of that stuff under the surface that they're never exposed to the conversation. So that's what we try to do, is bring that conversation to light, allow them to add more value to their clients, but really to their community, because many of them, just like many wholesalers, get in the business, like they see HGTV or whatever, this is what I want to do, and you get in to start doing that, and then your business takes over your life, and you never pursue why you got in the business in the first place. That's why I love the podcast that you did about, like, why are you building this business this way?
Right.
We see agents all the time speaking to the wrong thing, in our opinion, and it's not necessarily the wrong thing, but their motives are wrong, which is a lot like wholesalers doing huge volume business or flippers doing huge volume business. It's not a bad model if that's your intention and that's what you want to have. We say agents like buy into the GCI lie, which is their gross commission income, which is what you're talking about with guys who do big direct mail. Like, oh, my team made this much in gross commission.
It's the same thing. You're trying to generate the highest taxable amount of income that you possibly can.
Yes.
That's really what you're trying to accomplish, whether it be agent side, investor side. Yeah.
It's like my team did, 200 transactions and made X millions of dollars. That's how much we generated. But when we get into a conversation, but what was your net? Well, I mean, I actually made this much. Nobody is on a stage talking about what they actually walked away with. No. And when we start talking to them, well, dude, you could make that in 10 or 20 transactions just on your own. How much do you enjoy actually managing all of these people? How much do you enjoy spending $5,000 a month on Zillow leads that don't pan out? How much, like, you got this big number over here, but is it really aligned to what you're doing? That's on my shirt. Like, is this aligned to what you're trying to do? And introducing that conversation to them. Part of the presentation that we just did was how to buy 10 houses in 5 years with $100,000. And in Seattle and Portland, the first one in that strategy, which is the BRRRR strategy, a little subtle remodel, but basically the BRRRR strategy. When you understand the true power of real estate over time, when you start playing a longer game than just what's my next transaction, you see that first house is going to make you a millionaire. Like, one house with $100,000 can make you a millionaire if you really understand the power of real estate, the stuff that you're teaching in Deal Finders Academy. When you really tap into below the surface, this is the most powerful wealth creation vehicle ever created, in my opinion.
It's insane. This was tax week, right? Because I'm one of those guys that pushes off. I take the deferment until October 15th every year.
Absolutely.
And I'm fortunate that my CPA is my college roommate, and nice. I won't oust him too much. But we've been through an audit together, so we have a close relationship, we'll call it. And I was sitting in his office, and I was like, all right, it's almost time for us to pivot personally in terms of acquisition, because I think you were in the business pre-bust, right? Yep. So so was I. And my biggest mistake pre-bust was I went buck wild and crazy buying rentals. And I thought that was what I wanted to do. Now, I did it the wrong way, to preface that. And meaning I bought with what I thought was built-in value a little bit, maybe, but ultimately it wasn't. I was just not educated enough to recognize true value. Yeah. And I still have a couple of those rentals today that, here we are 15 years later, whatever. And they're great now, but they went through some ups and downs. But I bought a bunch more. Couple I had to do deed and lose with, hand back. It just bad timing, stupid purchase. It was what it was. But now moving forward, we're looking at, I had him pull tax returns for another guy that I didn't look at his whole return, but the guy had a $2 million loss, right? None of that was a real loss.
Mm-hmm.
Okay, he bought 4 apartment complexes in Pendleton that were about $1.5 million each, and he created the amount of depreciation and accelerated depreciation for certain line items that now you can do. He took a $2 million loss against all of his earned income and everything, and he was after his earned income.
Yep.
It was insane. It blew my mind.
Oh, yeah.
And I know those things are possible. Our pivot point is probably sometime next year is when I'm going to go back from, we'll call it, gross commissions, gross revenue focus to, back to long game play, right?
Yep.
Because right now it's fighting an uphill battle, and we find them occasionally where it makes sense, but it's tough. It's tough to find stuff that long-term makes sense unless we're building ground up if those opportunities are there, we're going to do it. But I think in a year or two, and we'll get to this a little later, there's a lot more opportunity for the long-term game when the market's in the shit tank, or we won't even call it shit tank, but we'll just say much cooler than it has been. You can buy rentals all day long at that point, or the opportunity to redevelop for long-term rentals there at a much easier, far less friction, virtually no competition. Because that's in 2013, like we're talking about, like there was virtually no value given to higher density zone dirt. Now I'm seeing people throw stuff out for like twice what they paid for it, 3 times what they paid for it if they bought it in 2014. So those days will come again where less value is given to the opportunities. And but anyway, back to the point is the power of what the long-term real estate could do. I mean, I'm looking at this guy's tax return, and he showed a $2 million loss. And he made more money than I made last year in earned income, and he showed a $2 million loss, and I had to stroke a check. And I was like, I mean, even I know these things, but to see it like in front of me like that was like, man, that's powerful.
Yep. And I think that's a great illustration, because those of us who have been in the space for a while, we know it, but we kind of need those reminders, and we're not always ready for the hearing to really internalize the lesson. Like the timing's just not always right for that. And I was in the business before that. I started formally in real estate as a lender with a small local portfolio bank. That's how I met the CEO of Green Canopy. He hired me as a lender. But I had been, I watched late night infomercials. Like, real estate's just in my blood. My dad was a contractor. We slowly, painfully flipped every house that I lived in growing up. And so it's just always been around me, and I've always been interested. In the 80s, I would watch Carlton Sheets infomercials. I'm a little older than you. So I would be up at night man, look at what you can do. And he's just calling people out of the want ads in the paper and the little nickel and, before Craigslist. And I'm so I was always interested, but I wanted to figure out how to unlock the money, because we never had a ton of money, but we knew how to do the work. So I went into mortgages, got hired. The bank that I got hired at sold the mortgage company, but I stayed as a portfolio lender. So then got into more creative lending, cross collateral, and what are all the ways that we could make this deal, because we don't have to worry about selling it on Wall Street. How do we just protect the bank in it? And that was a great experience.
Oh yeah.
But the bank was a little forward thinking and had a big builder on their board, and that builder saw what was coming and was like, hey, we're out, we're not buying any more land, we're batting down the hatches, we're going to ride out the storm, keep some dry powder for when we see things coming back up. So the bank was like, we're not generating any new business, we don't need you out generating business. And that's how I moved into full-time off-market acquisitions, focused on pre-foreclosures, then to Green Canopy. This is, I think, that time again. I don't think it's 2008. All the fundamentals are super different. Something is going to happen. It never stays great days forever. Something is going to change more than just a noticeable softening. I just think we're in a softening right now, just almost a strong seasonal correction is what I see right now. But getting to dry powder, getting cash on the sidelines, ready to take advantage of that opportunity. Because even we all have more experience now than we did before. When I saw, I think it's Blackstone or whoever, the big hedge fund, come in and start buying stuff at auction, and they were paying retail, and I saw them snatching
it
stuff
seemed crazy
up
at the time. They were overpaying everybody, and everybody was like, what in the fuck are they doing?
Yeah. The Invitation Homes and stuff. I'm like, here's a bunch of Wall Street MBAs, because I'm not no college, no anything. I'm like, these guys back in New York think they're making good decisions. They were playing a different game.
Yep.
I was looking at a 30-day, 6-month game. They're looking at a 10-year game, and I see the retail prices that they paid then now. I'm like, shit, man. Yep. If only I had hedge fund problems.
Yeah, they were playing at least a 5-year game, and we were all playing the 6-month game at that point.
Yeah.
And that's why we were scratching our heads going, why would they pay that? And they disrupted, I don't know, probably 10 major metros at least across the country, where they just totally adjusted prices. Phoenix, I think, they descended on Phoenix first because that was a bomb hole, and then a variety of different ones outside of that. But no, I remember that.
They understood how to recognize that the fundamentals of the market are still okay. It's this aberration that is the debt crisis. And it's going to come back to this. We can get undervalued assets now because we can be patient buyers. They're not leveraged in hard money. They're not any of that. So they were in a good position to take advantage. And that's learning that we've definitely taken. And a big part of our teaching now is that be able to identify that opportunity, create revenue streams to get capital. So when that opportunity is here, you can strike and really capitalize on it and set yourself up for the long game. Because it's like 10 years down the road seems so far when you're looking at it out the windshield. It's like, I'm never going to get there. It's that mountain range way off in the distance. But then when you look in the rear view mirror and see 10 years ago, it's like the blink of an eye, man. And so that's where we're trying to reframe that conversation with people. And like, flipping is fantastic. Developing is fantastic. Being a high producing real estate agent is fantastic. You can make a ton of money. But as soon as you stop performing those activities, the revenue stops. So take the money from those activities, park some into creating passive income in an asset that's going to appreciate over time. We're not like going to Texas, going to Alabama to buy 16% caps because we want to get income and appreciation.
Right.
So we want to be in a balanced market. But pull some money off the table, and it's amazing how little you actually have to do to get out of the rat race. We had people go through an exercise that was like, how much do you need to live comfortably? If your house is paid off and you just want to live comfortably, right? Don't put big business overhead in that. If you want to shut down the business, most people, it's to live a pretty good life, it's between 10 and 20 grand. Not like, dude, I'm flossing, flying G4s all over the place.
No, but you can live pretty, I mean, without a mortgage.
You got no mortgage, no car payment. You got 10 to 15 grand a month coming in. You can take fantastic vacations. You can do a lot of stuff. Kids through an Ivy League school, that's a different thing. So if you look at it through, I need 15 grand a month and a 3-bedroom, 2.5 bath house in a decent market in Portland rents for $2,000 to $2,500. Let's say I haven't looked at Portland rentals in a while. That's like 7 houses paid off gets you there. Okay, well, how do you get to 7 houses and pay them off? Well, if you know the BRRRR strategy, find 100 grand, add the value, put the permanent financing in place, recycle it. In 3-4 years, you got 7 houses. Now with your skill set, pay them down, debt snowball. Get that free and clear. Now you can weather any cycle. You got no debt on the property, so you don't have to worry about deed and lose. You don't have to, all that stuff. I got crushed in that market, dude. I know, those of us who were there still got the scars.
No, I remember looking at my bank account and thinking about the negative cash flow every month and doing the math and then like, how long do I have, right? And that was the point where I was like, I held on longer than most because it was a pride thing, and I was like, I didn't fuck up. I made the right choice, and then finally had to recognize it. But there was 2 that I had to get back, and but I still remember that day counting the money that I had and the amount that I was hemorrhaging every month, and how much time do I have to try and fix the problem in between. And ultimately, it wasn't a problem that could be fixed. And a lot of it, one of them I probably could have kept, and today it would have. It just was such a cheap townhome that it would have rented for a lot more than the debt service if I'd left it in place, and it would have had a little bit of equity left, and I would have had some decent cash flow out of it, and still kept the depreciation. I didn't have to pay taxes on the recapture on that I claimed, right? The other one I let go because it had 2 problems. One was an HOA that had a bunch of assessments coming down the pipe because there were a lot of foreclosures in the complex, and so they had to fund their account for operations and for upgrades and things like that, and there was a lesser base of people paying, and so that happened. And then also the city of Portland decided to keep taxes, property taxes on these units at ridiculously high levels, even though the true value of those properties had dropped probably 30%, we'll say. And so then it made it just an unfeasible. I could not win that battle.
No, you're getting attacked on every side.
Yeah, and that was where I had to say, you know what, I just white flagged that one, and that was a deed in lieu that I dealt with. But that was 8 years ago now and whatnot, and But hindsight's 2020 on
Yes.
you know, and I should have never bought that one. The other one was a marginal buy, but I bought it with the intention of a guy living there who was going to buy me out. Well, he ended up being a piece of shit, and he didn't buy me out anyway. But that was my fault for engaging in that relationship. So ultimately, it comes down to me. But the other one was it was a bad buy. It had a great view of the land. It was a great property, but it was just a bad buy in terms of the way that I was buying it and what I was going to do with it, which was keep it as a long-term rental based on the operational costs it was going to cost me every month, debt-wise and everything else.
Rentals are interesting. I mean, that's another reason why we like the BRRRR strategy a lot, because just because you can buy something doesn't mean you should, and you want to have that lens of like, well, what is this? And we get that question a lot. Well, what if the market changes and I got to sell? Well, if you really do the BRRRR strategy effectively on the right property selectively, if it's not a great BRRRR, then flip it and take the revenue and go find the right property. But you want to be ready to weather that storm. And so to execute it, you got to be able to get the takeout financing. So you got to be under 75 anyways. And then we say I always get at least $500 positive cash flow. So you should have some cash flow and a good amount of equity that if you need to sell, hopefully you can beat the market down and get out without having to bring a check to closing, because that's not something that we want people to do.
No.
We get people all the time, like, I found this property, it's a great rental, and I can buy it this way, and I only got to bring $500 a month, but in 3 years, rents will be higher. Our position is like, no, man, you spend money on hobbies. Investments make you money. If you're bringing a check to a rental deal, it's not the right rental deal. Be patient. The right deal is out there for you, but make sure that you're insured and protected around that. The one exception to that rule, but we still encourage people to BRRRR the property, is if somebody's looking for their own place and wants to leverage up, like you want to do a 2 to 4 unit FHA 203K type of loan and get in with a low down payment, but add value to create equity, and it's your primary residence, then you're in that property and house hack it. That's a different thing. Otherwise, we encourage people, like, be careful about it and rotate slowly. We've seen, and you probably see it in the coaching that you guys do, people get super excited about something and go after it, but they don't keep what we call like our level 1 income rolling, which is for a flipper, like keep flipping houses, or a wholesaler, keep spinning deals, or an agent, keep doing your retail business and take advantage of these opportunities that strike. Don't disrupt everything and try to make a hard left turn, because you're going to put yourself in a bad spot. It takes a little while to build a pipeline, get ramped up, learn what you're doing. So, like, gradually transition like you're doing. Be intentional about the move over. Talk to accountants, understand the whole ramifications. Most people in our industry, it takes them some work to get bankable, because they're doing a good job with their accountants creating no income, so they don't have tax liability, but they can't qualify for a loan. So you want to work strategically with your partners.
That's been my thing, is I've been working on bankability for a sustained number of years now, and I pay the piper for it, but it's been with the intention of now setting myself up to be incredibly bankable so that we can jump. Because I don't want to go jump in and buy a house or a duplex or a threeplex. I want to buy a 50 unit, 40 unit, whatever it is, something larger, massive. If I'm going to pivot, when we pivot, that's the jump that I'm going to make to do it. And now that I'm bankable enough to do it, we've got enough, obviously dry powder set on the side to make that move. I'm just kind of picking my time to do it. But yeah, our daily function is, we turn and burn and redevelop, and that's, I guess, the income, the earned income that won't be disrupted if we take on this other stuff. And that's a difficult balance, because you get shiny ball syndrome a lot, and you look at, these opportunities, like I was telling you about that fourplex opportunity, and I was looking at it, and the more I think about it, I was like, what the fuck am I doing? Like, it's, yes, we could do it. Yes, I could do it. But is it going to take away, is it worth what it's going to take away from my mental bandwidth from the daily business of what I know we do really, really well for 4 units? Probably not. No. Right? So you kind of have to pull the reins in on yourself and kind of do that, which is tough sometimes.
It is.
Especially if we're deal junkies.
Yes, absolutely. That's one of our biggest constraints, is that, like, getting clear on what the end game is, and does everything map to that. And we have a banner in our office that I got earlier this summer, because some of the guys that are on our team that we're having go out and prospect and door knock, like, we love door knocking. they were having a hard time identifying, like, is it a deal or not? And so we grabbed the phrase, fuck yes or no. Like, that banner hangs up in our office. When you walk in, that's the first thing that you see. We spell it PHUK because the Thatch is fuck how. But that's what it is. Like, is this the thing that I'm looking for, or is it not? And just don't let the distractions get in the way, because we definitely can all chase. Here's an opportunity. How do I make this a deal? And especially, like, if you just love making deals and solving those puzzles, it's easy to get distracted. But, like, no, this is on the way. This I'm excited about. Then go do that. And if it doesn't map to it, then don't do it. We see deals that look like great deals in Washington all the time. And we get stuff from California all the time that's like, dude, look at this deal. Yeah, that's a great deal. We get the math, but we're not in California. Our whole machine's not set up for California. I don't want to go move to California and fly back all the time to see my kids, even though we can make a ton of money. Like, it's not in line with that end game. So we've got to be in that constant restraint. But you got to have the awareness of your destination in order to exercise that restraint. Like, what am I doing this for? Why? Right. What do I want to create? How do I want my life to look? Then you can map to those decisions.
Yeah, no, it's a good point. And obviously that's something that I've spent a lot of time thinking about, which is mainly we have the mothership that generates a lot of earned income. Well, the mothership needs something to offset a lot of that earned income legally without me getting all crazy cooking the books, right? Yeah. Well, they just did that hit piece on what's his name, whether you like Trump or don't, it doesn't matter to me, but Jared, I think it's Kushner, whatever it is.
Yeah.
Anybody can do what he did, and the who he's tied to aside, that's an important concept that is available to everybody, and that's ultimately the where we're trying to get to is, can we buy big enough, valuable enough long-term real estate assets to offset huge amounts of earned income via depreciation, accelerated depreciation, etc. Because that's the motherland, right? That's where now you basically you're keeping virtually every dollar that you make, with the exception of some state taxes. But you guys live in Washington, so you don't have state taxes. You just pay it in other taxes. But that's my long-term vision. I think you're right, though. It's important to know, what are you trying to get to, what are you trying to accomplish at the end of the day.
Well, and especially for you, I was excited when we were talking about the families and stuff. Like, as your kids get older and they get more into sports stuff and events that you want to go to, and like, I coach both of my sons, so I leave every day at like 4:00 to go to practice and do that. I don't want to have to be going on that deal. If it's a smasher, I'm like, oh man, I'm salivating. Yep, not gonna make practice tonight. I gotta go make this deal. But I got the choice on whether to do that. I don't have to get that commission to keep the lights on. And being able to have that true freedom. Like, we define wealth as having freedom, options, and choice. That's what that is. And the passive income is a great vehicle to that. Talking about the tax aspect made me think about the importance of, like, the questions and the understanding. I heard somebody say they were at a Robert Kiyosaki event, and he said, all right, I'm looking for deals. Who's got a deal for me? And everybody in the audience started, I got this, because they know, like, here's a big hitter. He's got a ton of money. I'd love to do a deal with Kiyosaki. But everybody just got in a frenzy about it, and he stopped them after a few minutes, and I'm paraphrasing what I heard. So if somebody was at the event, you probably know better than I do. This is what I was told. He stopped and was like, none of you guys asked me the question, what kind of deal am I looking for? I got all the income I could ever need. I'm looking for tax shelters now. That's what a deal looks like for me now. So I don't care how much revenue it creates. I'm trying to move money over here and take advantage of the tax code, which is, it's a nonpartisan issue. The IRS is a service that touches everybody.
Yeah. Oh yeah. They hate us all equally.
Yes.
So,
Yes, absolutely. We're all, in theory, playing by the same rules.
Although I will say, the year I got audited, I asked them, because I was curious. I was like, why did you audit me? And they said it was because I claimed the depreciation on one of my rental properties. And so that was obviously a bullshit answer. But that aside, they hate us all equally. But yeah, you're right. As you grow kind of in this business, you kind of climb the proverbial real estate ladder. Your needs shift, right? Like, initially, you start off as a wholesaler, agent, whatever. Your needs are earned income, right? Because you got to pay bills, you got monthly expenses, and then from there you grow to, you create a lot more of that. You have some money on the side. You have some, insurance money, we'll call it, some buffer space. You buy down. Now you can start buying assets, right? You can use those assets to offset your income, and then you start making more income. You have more cash on the side. You buy bigger assets. So your use of real estate changes over time.
That's right.
And I think that's just important to say, because it's a journey that I've been on, and I've now recognized in full in terms of what it can do for you. But I think a lot of people, you're right, they get fixated, whether it be the tip of the iceberg that you talked about before, or just the earned income part of it. Let's flip 200 deals this year and make all this earned income so that I can pay 50% in taxes. Because nobody wants to get on a stage and tell them what they made after paying all their guys their overhead and paying their tax check. That doesn't put butts in seats.
No. Those aren't the numbers they show you on HGTV for sure.
No, and that doesn't sell coaching programs, doesn't sell masterminds, doesn't grab people's attention. Nobody wants to hear that I made $1 million last year and I paid $500,000 to the IRS, right? Like, that sucks. That's what that says. But I made $1 million last year. Sounds great, right? So
it's brutal. And there's nothing wrong with like wanting to be on stage. I certainly have not figured out how to shed my ego yet. So like, if that's where you want to be and that's what you like, then do that. But just understand that's the reason that you're doing. Like, be honest with yourself first, right? Know who you are, why you're doing what you're doing. Then it's a lot easier to handle all the repercussions that come along with that, or the opportunity loss from not rotating to something else. Just be aware of that stuff that's going on. And Thatch, who we mentioned earlier, he admits and talks about it a lot. Early in his real estate career, his focus was like 150 deals. It was this many transactions. It was this much commissions. That was his sole focus. It was flipping this many houses because that's what he wanted to speak to. But he underwent the transformation, like where we're at, in the changes that we're making, from realizing, no, wait a minute, there's a different game I can play here, and I actually like this other game better. So it's often these lessons are a part of everybody's journey, but if you're never exposed to the conversation, you never know that you should try to go that way.
Yeah, no, it's crazy. I'm glad we kind of segued onto this topic because I didn't really have it scripted, but this week it hit me especially hard after looking at that other guy's tax return. Sorry, I won't call him, but I'm glad you showed it to me. But it was great. I mean, it just blew my mind. And then I went through. I was like, all right, go get the I forget the report that it's called, the feasibility study of some sort, where basically you hire an outfit to come in and then they do the depreciation report and the accelerated depreciation. They break it down, and he showed me the sheet and the numbers and what depreciation you can take over 27 years, what you can accelerate over 5, and just the amount. And I was like, holy shit! Like, and some of this is new changes in the new tax code, and some of it actually I was going to get into it in next week's show and some stuff. It was just going to give me all details. Some of it is actually not 1031able. So it basically, it has to be an asset that you basically hold till you die, because you cannot 1031 away from some of that accelerated depreciation. But the point, most of the time, if it's a big enough complex, you're not going to sell it anyway. But it's just crazy the power of what that provides you. Because then you can go out and you can make money and you can keep almost 100 cents on the dollar legally without cooking your books and having to worry about an audit.
There's so many opportunities that you don't have to do kinky shit nowadays, and that's in a real estate, especially in off market over time. The thing I'm most excited about is the integrity that's come into the market, the contribution mindset that's come into the market, like the amount of information you share on the podcast just freely. Dude, killer, fucking great shit, man. And it's free. 15 years ago, when I was going to meetups, everybody was a secret. No, it's like everybody's playing poker, hiding their cards and that. And like, I know a lot of guys, and I've done some shit that I'm definitely not proud of. And if I were to go back, I would do it again, differently. But just how different the space is now is amazing, and the willingness to share and contribute is fantastic. The changes, the opportunities that are available through taking advantage of loopholes, and like, what are you calling income? What are you calling wealth? And how do you classify it? Because if you're taking advantage of the tax code, a deal can make sense that doesn't make sense to a flipper when you understand how to look at it that way. If you want to get crazy and get into self-directed IRAs and Roth self-directed IRAs, there's all these ways to do that. You don't have to do shady shit to get rich in real estate, man.
Right, I know.
And you don't have to rip off houses from little old ladies to understand the opportunity to add value in real estate and accomplish your goals. You can help families in bad situations and make great money doing this. Like, you can create win-win outcomes. And I love that kind of new spirit that's entering the space. I think it's really cool.
I think there's a lot of people that don't understand that, and especially agents. A lot of times, you know, I had a conversation online with an agent that I posted some pictures of one of our projects, and I was like, now you understand why there's a wholesale market for real estate.
Mm-hmm.
We're not ripping anybody off.
Yep.
We're buying the stuff that your client that wants something that speaks to them, that you write an offer to, that's the tip of the iceberg, that want nothing to do with.
Yep.
Right? And there's a whole lot of that out there. And so it's an interesting game, man. It really is. And it's changed a lot as well in terms of the amount of information that's out there, the way you can connect with people. I mean, how we're connected right now. You know, we started this podcast, it's almost been 5 years now, and you know, we were, I think, probably the third real estate podcast. We were right after Bigger Pockets had me on as a guest, and that they had just started, and then we started this show. Justin Williams, I talked to him before he started his show, and he was like, I'm starting this podcast, and I was like, I'm starting one too, and
nice.
We were like, there was like, I think one other, Sean Terry had a podcast out there, but I was like, I don't even know if it got listens at that point. Like, people didn't have the podcast player on their phone. It was pretty questionable, like, in terms of like mainstream, like, what is a podcast? How do you even listen to it? And that's now to what it's grown into. Ultimately, it's the future of education, I think, in my opinion, or at least connecting with educators to some extent, and getting as much education as you can for free by listening to it. I mean, it's like going to a college course, you know, but something you're actually interested in. So it's crazy. It's a totally different space, and it'll be crazy to see how it changes even more as we kind of move forward.
It's amazing. I was at a meetup Monday night in Seattle with a guy who runs a big huge Facebook group about like online marketing and what was that, and he was in the city, so he hosted a little meetup, and I went, and it was awesome. But we were having a lot of conversation around like how different the world is now, how fast it's changing, and so, like, not to downplay, man, there is real problems in the world that we could spend a lot of time discussing. I'm not downplaying any of that. We're super fortunate to be in the Northwest at this time and who we are, all of that. But with all the problems, like, there has never been, for me, like, more hope in what's going on. The smallness of the world, the ability to communicate across the globe, the information that's out there, there is going to be massive changes undergoing. And from the education specifically standpoint, the availability of information. You don't have to be super rich and go to university anymore. YouTube University, Khan Academy, podcasts like this, private groups, public groups, and Facebook. Like, you can learn about whatever you want to learn about for almost nothing. Or my favorite thing is to get paid to learn, which is why I really love wholesaling. And what agents can do in the stuff that we're teaching is they can get commissions and learn from other people how to leverage up, right? Bring you a good deal, see what it is. Hey, how'd you flip it? Why'd you do it this way? What is it? I'm going to bring you a better deal next time. And they're getting paid with no risk to be better positioned for themselves. Like, that's how I've learned everything. I got 1 quarter of community college in my experience, but I always just got on the job training. Here's something I want to learn about. I'm going to go get paid to learn it, master it, and move on. Those opportunities are so plentiful. I'm so excited for like what our kids will be able to do.
Oh yeah, it's crazy. Like, just even on a different topic, but like I love basketball, right? And I've always loved basketball, and thinking now, like, I remember as a kid, I was like, I'm trying to think up moves, right, to like cross people up and get by them. Like, all you got to do now is go on YouTube and be like, 10 best crossover moves, boom. And here's some guy showing you like the exact footwork, this, that, everything else. Same with real estate, same with everything else. It's like that. It's that easy. Funny thing is, not a lot of people utilize the ability to get that education, whether it be basketball, real estate, whatever. But it's there. At your fingertips. You can pretty much get it on demand. Which, it's a crazy world, and it's an awesome thing.
It's amazing. Not a lot of people taking advantage of it is so crucial. I did a year and a half ago now, when I first left Green Canopy, a real estate meetup group in Seattle, like one of the old RIAs in Seattle had me come do a presentation, and I went, and she was like, nobody can take any pictures of the slides, the slide deck won't be available. And I was like, wow, okay. And so afterwards I asked her, like, why not? And she's like, because they're going to rip you off and duplicate and da-da. And I'm like, you are like really disconnected from your audience and what the world is like now. we'll give away almost anything that we have for free. Like if you follow us long enough, you will probably see everything that we do over time. You'll have to spend a long time watching it, but you can get it. The trick is there's nobody implements. We had people come and pay 300 people in a room in the Hyatt in Bellevue last week for 2 days, went through great strategies, tactics. People were taking pictures of the slide, all that. I know they got back to their office on Friday and went right back into the old stuff. Only a couple people are really going to take advantage of the opportunities that they're presented in life. And
it's crazy because people ask me all the time, like, why the fuck do you share that on the podcast? I'm like, I could tell 99 people how to do exactly what we do. And I have, you know, let's say, so we'll say I've said 99,000 people, right? Yeah. Only 1,000 of those 100,000 people will actually take anything that I've ever said here and utilize it to push the puck forward in their business, real estate wise. Yeah. It's just the reality of life, unfortunately. And I think that's part of the reason why, you know, some coaching programs get a bad rap, but I think that working alongside people through Dealz is a void in the market, which you guys are serving. We have a higher end program that does that as well, but that's where people fall off. That's where they go back to the daily minutia, the daily, you know, whatever their habits are. However they've been generating income, that's like their fallback instead of kind of pushing forward. So I think that you're right. I mean, take pictures, whatever. It's, you know, it's not in the idea, it's in the execution and the follow through. That's where the real value is in terms of changing your life. Anybody can have ideas. I mean, it's ideas are, I forget what the quote is, but they're basically worthless unless you implement, right? And implementing is difficult sometimes. And so
that's exactly right. Like I don't think there's a lot of true genius or brilliance in what we do. I think what we do works because we do it. And for speaking for us, not speaking for you, I think you guys have some fantastic shit, man. I've definitely.
I'm not brilliant. I've got some tricks, but I you know, they weren't some of them were my idea originally, but they were inspired by guys that are smarter than me in the marketing space. Really, at the end of the day.
And the magic is in the implementation, and I think the piece that a lot of people miss, and it's why like we focus a lot on the mindset side of things, is because growth is hard. Like whatever it is, whenever you're trying to learn a new skill, it's hard. If you're going to the gym and you're like working out and you're sore and it's painful, but to expand your comfort zone, like anytime you're expanding, there's pressure. It's a little bit difficult. So you got to really be able to like tap back into the, like, what's the why behind this? What is this? And truth be told, everybody talks about money. Like, I want to be a millionaire. I want to be a 10 millionaire. I want to be a billionaire, whatever it is. I want 50 grand a month in passive income. Everybody wants that. If you're a wholesaler who has done a couple deals, if you're an agent who's closed a couple transactions, you flat out have $1 million skill set right now. I absolutely believe that. You have done what it takes to go execute at a higher level to get to $1 million. You don't because you're not attached enough to why you're doing it. It's not clear enough. It's not compelling enough to do it. If your wife's life depended on you finding another deal this week, you would go find it. If your kid's life's dependent on it, you would go do it. You got to tap into that. Like, why? What is the end game? Why am I doing this? And then what are the things inside of that are holding me back? What am I afraid of rejection, so I don't want to cold call? Do I think I'm not good enough? Do I not really deserve it? What are those inner tape conversations that are just like messing you up? I refer to our partner Stephanie a lot as like, she's a master in helping people unfuck themselves. She's a clinical therapist. She's super good at what she does.
That's $1 million skill set. Yeah.
Oh, dude, it's amazing. Like watching her work and even seeing her Jedi mind tricks on me sometimes, I'm like, I know what you're doing and it's working. It sucks to know what you're doing and see it working on me. It's amazing. But that piece of it, like the call reluctance in sales, your podcast a couple weeks ago with the cold call guy, that was fantastic. But he's like, you got to tap in the why, you got to get in the right mind space and then get it and fucking embrace the no, man.
Yeah.
No's are fantastic. Our scripts, the first question is basically designed to get a no. Get that reflex no out of the way, diffuses the conversation, get into rapport.
Yeah, David is like the king of no's. Like he gets a no, he gets a boner.
Yeah.
Like it just is like, yes.
It's great, man, because that means you're getting into the conversation. Most of the time it means not yet. But even if we're talking about targeting a seller and they're like, no, I'm never selling my house. They're going to take me out of here feet first. It's going to a nonprofit charity when I'm done. It's already in the will. No. Celebrate that no, because you don't have to spend more time trying to close the unclosable. Go get another opportunity that you could make a deal.
Right. And there's a lot of those. I think a lot of people get hung up on that too. Like they're There's unclosable. You cannot take an unclosable and make them closable.
No.
There are leads that are just dog shit, and it's okay that they're dog shit. And I think that's a lot of frustration that people get, that we've noticed specifically now that we've been in the education space for a long time, is that they feel like they're a failure because they get leads in and those leads don't turn into deals. And it's like, well, most leads are dog shit anyway. Yep. And so I think that's a big epiphany and just big hurdle a lot of people need to get over. Like, you can't close the unclosable.
No.
I don't care how many sales training boot camps you go to. I don't care how many Jedi mind tricks you learn. If it's unclosable, it's not a deal. It's not a deal.
Yeah, it's not a deal.
Yeah.
And you can't, the more time you spend banging your head against that, you're missing the person that is actually looking for you. Like, they are out there. And we just dropped a small, tiny mail piece last week, and I got a phone call like 10:30 Friday night from the hotline number, and I was like, this should be interesting. 10:30 Friday night, who's responding? Let's see what this guy is. And the guy was a little drunk, but he wanted like over twice what the actual value of his property was. So I was entertaining him. He had a Zillow make me move. Like, I'm not offended. I'm not insulted. I'm not whatever. He was drunk and trying to make a deal. Good for you, man. I'll follow up with you later this week and see if in a different state of consciousness you got a different number. But none of that is personal. It's recognizing those no's, and it's not there. What I try to listen for is the yeah, but. I want to sell my house, but. That's the problem that we can solve when we know this space. And the reason, as you were talking about a minute ago, like, so many agents, they're one-trick ponies, and not knocking them. It's what they've been shown. They know how to put a sign in the ground, but the opportunities are in the yeah, but. I want to sell my house, but it needs a bunch of work to go on the market. I want to sell my house, but and they never say this, but the underlying is, but I'm ashamed and embarrassed of the conditions that I'm living in. I don't want anybody to see it. I want to sell my house, but it's really hard and complicated, and I need somebody that can make it really easy. That's where we create.
And that's exactly the last two houses we bought. That's the category they fall into. Yep. One we're cleaning out right now. They want to sell their house, but they want to remove all the complications, and they don't want to touch any of the stuff, and they literally left everything in the house, right? We solved that problem.
Yep.
The other one, I want to sell my house, but I'm going to tax foreclosure this month, and I don't want to go into contract with a wholesaler that's going to try and flip it and maybe can't perform, and we're fucked.
Yeah.
So we're willing to take less money with somebody that we know can show us actual cash money in the bank that we are set to close, and we will not fuck you, right? Yep. Like the yeah buts. You're right. That's where you want to be.
That's it, and it's, to me, like, I take a lot of pride in being a good salesman, and I think sales is just an incredibly valuable skill set and commodity. Like, nothing happens in business until somebody sells something, period. But too many people call themselves salespeople who are order takers, and they're just there, like, waiting for somebody to instruct them what to do, fill out an MLS form or do this. Like, no, man, closers solve problems. We got to uncover them, and we got to solve them for people, and that's where we make our money. When we get that, yeah, but I got tax foreclosure, I know how to create the solution for your problem.
Right.
Yeah, but I don't know how to get all this stuff out of my house. I don't know how to downsize. I don't know where to move next. Listen, I got great property managers. I know a ton of rentals. If we could find you a place, if we could get you movers and just make this really easy for you and let you start a new chapter in your life, would that be of interest to you? Man, if you could do that, I would be willing to sign right now.
Yep, that's easy. Tax foreclosure deal. They said we called you because our competition sent us letters stating that we were going to tax foreclosure this month and we're fucked, right? Yep. You sent us something different that didn't mention the fact that we're fucked. So we like that, so we called you, right? Yep. So that was our in. But we then, as soon as we figured out they were going to tax foreclosure, Chris got on the horn, called Multnomah County, got a hold of the person that's in charge of the tax foreclosures, in charge of getting the file in front of a judge to sign off so that they can then put it into the stack of this goes to auction with the next auction, freeze it, let them know that we've got a transaction in process. It'll be closed in 2 weeks. Done. Call the lady back. She's stoked. We got a great price. We're buying a house end of the week or next week, whatever. So it works out. But that's you got to act, right? And that's part of being a great salesperson. And then delivering that. Now you look like a rock star, right? That's great sales.
Man, there's some great stuff in what you just said there, man. So much. The being an end user, I wanna talk about our pre-foreclosure guys, so don't let me forget about that. But being the actual end user, there's a lot of power in that. We have a lot of agents send us deals that are on the market all the time, and we just, as a general rule, don't do on the market deals. For
We don't either.
It's not there. There's too many people in the pie. It's generally exposed. But we also spin a fair amount of stuff. Like, we buy a lot of stuff, but we got pretty high standards in what we buy. And we know a lot of people with different models, different benefits. We want to like honor the deal and be respectful with everybody in it. So if it's a deal that we're going to assign, we're having that conversation with the seller right in the beginning. If it's on the market and we tie it up to spin it, it's now a damaged listing because it goes pending on the market. And if we don't place it, because now it's on the market and everybody sees that they could get it and it's not a unique opportunity and it's probably overvalued anyways, and they go from pending back to active, now everybody else is going to come in and just lowball the shit out of them. And now we've hurt the seller. Like, we're not in the business of hurting sellers. We're trying to help the sellers solve their problems and make some money in the process.
I just got an email from one that it's around the corner from my house and probably one of the projects we're going to go look at right now.
Sweet.
Went back on market because that same thing happened originally. Yep. The dumbass listing agent accepted another one from another person who sent it to me and said, I have an amazing opportunity at $500,000. I was like, oh, I've seen this house before. It's on market, right? But I'm curious what they dropped it to because they got screwed the first time. It's listed at $494.
Yeah. I love that when it's listed at $494 and they've got it overlisted. Like, really, dude?
So you got them to take $480 and you're trying to tell me to buy it at $500 on something that's already crashed and burned once and it's ultimately going to crash and burn again. I could probably buy it at $420.
Yeah, that's if I was direct to them, and and that's the other piece of it to me. The agents that do that, they're not adding a lot of value to the equation. I don't mind. I've charged big wholesale fees, and I don't mind paying big wholesale fees when the value is there. I don't get caught. I've pretty much graduated from the price versus cost scenario. I'm looking to pay for value, and so when somebody's bringing value, and it's whether it's a wholesaler or an agent, and they're like, I've negotiated this sale with the seller. Here's why it needs to be done this way. Here's the price. Here's the comps. Here's what I see the opportunity. And they've done that work. Dude, I'll pay whatever the market will bear for that work. Somebody sends me an address. The seller may be willing to sell at some point in time. Tell me how much you'll offer. And I'll go, I can get addresses all day long.
Totally. And you're robbing my time. So, no thanks.
That's totally it. In the pre-foreclosure story, the letters that you said the other guys were saying, like, you're in a tax foreclosure, we've got you over a barrel. I just really hate that approach. And when I first started doing off-market solely acquisitions and wholesaling, I worked pre-foreclosures primarily. I did some code violation stuff. I did some probate stuff. I did just driving for dollars opportunities and recognizing them. Man, I wish your app had been out back then. It would have made my life a lot easier.
It would have made my life a lot easier, too.
Oh, shit. Goddamn legal pad and county recorder's office. But I went to a door one time, and the guy knocked the door, and he just looked like beaten down, and just like he couldn't take anymore. And he looked at me, and he's like, "Where's your checkbook?" And I said, "What do you mean?" And he said, "The last two guys that have showed up here have had their checkbooks out, and just asked me how much they needed to write a check for me to move out of the house because they knew I was losing it and going to be on the street anyways." And I was like, that's not what I'm doing here, man. I know you're in a bad spot right now. You got options. I can talk to you about a few different ways that you can get through this process. And if a sale is the one for you, I can definitely help you with that. But I'm not here to kick you when you're down. That's not what this is about. So I really hate the people that employ those tactics, because I know, and you've been doing this long enough, you probably get like referrals and other people like, this dude took great care of me, or I didn't do anything with him, but I like the interaction that I had with him, so my friends should call him. Like, you can do this business in the right way. My favorite deal, my favorite seller I was ever involved with actually wasn't a house that I bought. It was a guy in West Seattle. John was his name. And I went to his house one time and he stuck his head out the window and he's like, "Nah, man, I'm good. I don't need anything. Get out of here." Okay, but it was a friendly interaction. A few weeks later, his auction date came up and it was Thursday and he had a bid. So he was going the next day. I showed up at like 6 o'clock Thursday night. Sunday, it was a fall day like this. And I turned the corner on the street and there is King County Sheriff's cars everywhere. There's like 8 sheriff's cars on the street around his house. SWAT team, the whole place is there. I park, walk out, there's all these guys, and I used to dress up a little bit more, so I had a sport coat, I had a tie on, and go walking up with a little binder like that, and walking through the yard with all the cops. The front door's on the floor because they had kicked it in, serving warrants. And I'm like, the guy grabs me. He's like, "What do you need to do?" And I'm like, "I'm here to see John. I need to talk to John right now." And they bring him out. I don't know if they thought I was like another cop or his attorney or what.
Probably his attorney, yeah.
He comes out and he's like, "What are you doing here right now?" And I was like, "Come over here, man." I was like, "Dude, you got a bid. What are you going to do? You're going to sale tomorrow morning. Are you going to jail tonight? Because like, if so, we got to do something. You're going to lose your house tomorrow. Don't do that. You got equity." And he's like, "Nah, man, I'm not going to jail." There, he was running a little bit of a crack house, so they were there serving warrants on other people. So he's like, "Come back in an hour. All these cops will be gone." All right. So I leave, come back in an hour, and the house is full again with people like smoking crack, and there's all kinds of stuff going on. So I talk him through what's going on.
Which is real stuff that we see often.
Yeah, this is real deal. So I talk him through what's going on. He's like, "Dude, I got this big, huge insurance settlement, but the attorney that has it like won't communicate with me directly because he's a bit of a character." So I was like, "All right, man, you don't need to lose your house. Maybe I can help you get that money. I tell you what, if I can find it for you, pay me $5,000 if I can get access and get the foreclosure paid current." He was like, "All right." So we just wrote up a little agreement. I called the attorney, called and got the sale postponed, called the attorney, got that done, got him access to the funds, got the $5,000, and established a relationship with him in the process. And I'm a little familiar myself with some chemical dependency and some substance abuse stuff, so he had a little bit of a soft spot with me. In establishing the relationship, we had some great conversations, man. And I won't say because of me, but I think I played a little role after a few hours of conversations. I swung by just to check in on him about 2 years later, and he was finishing up a Voc Tech program, was clean and sober, had totally turned his life around as a result of that moment. So it's not a deal I did, but I did find a way to get some revenue out of it, but was able to make an impact for somebody in a way that wasn't just like preying on them at the worst possible time in their life. It's a story I think about a lot. Every time I'm in that neighborhood, I think about that deal. We have powerful opportunities to make positive impacts in people's lives. We don't just have to be predators stepping on necks every day.
No, I agree. I mean, there's a number of different families that we've bought houses from that they've lived in their whole lives or multiple generations, and they come back as part of the deal to see what we've done after it's done, right?
Yeah.
And they know what we sell it for. They know that we make money, but they want to see us bring the property back to life or, do something.
That's cool, isn't it?
Yeah, it is cool. So, I mean, it's not like because we're making money, they don't want to, have an end relationship with us or not be somehow connected to us later on, or it's a bad thing. It's we're providing a service, and they obviously like the service we provide and the end product that we create. And so, we've done that countless times, really. Yeah,
that's one of my favorite experiences doing. The first house that we did with Green Canopy, the one I found on Craigslist, it was like a 1916 built, kind of a Tudor style. In West Seattle with this massive tree in the back. It was actually a giant sequoia was in the backyard. And so we always called it the Sequoia House. The family that we got it from, it came through a wholesaler, but it was an estate deal in the background. Their mom had grown up in the house. The family moved up from California when she was 7. They brought the sequoia from California with them and planted it in the backyard. Now it's this massive, 90-foot tree. But so her kids were there. She grew up in the house, raised kids there, all that, and the house was just destroyed. The southeast corner of the house had sank 8 inches. There had been animals in the house that she wouldn't let out, so we had to peel all the floors and kill them and all of that. A bunch of the family members came from Oregon and Eastern Washington when we got done to walk through. And they were literally in tears that we had saved the house instead of tearing it down, that new generations of families could have the memories that their family had there. It's so cool, the additional experiences that we get to create. And they knew, we're in business to make money. Most people get that, and it's fair. It's when you get, when you're not transparent or you're being kinky or hiding shit and not disclosing, that's where the problems run up. But when we're talking to a seller, we're going to make some money, and I want you to pay more. Well, here's where I can't. And I'll walk them through the numbers in a seller to net presentation. Here's the margin that we're trying to make. We're not making Nordstrom margins here. These are Costco margins that we're talking about. And they're okay, that's fair. You are taking a lot of risk. Most people are pretty rational when you're equipped to have a real conversation with them.
Yeah, and we do that a lot. We, especially now as things are softening. We're Chris talked to a gal yesterday that we offered her $285, and we said, look, it's on a busy road. It's in Lake Oswego, but it's on a busy road, and they're Renaissance is building 2 houses very close to that are new construction on the busy road.
Yep.
We don't want to go third new construction house at a plus $1 million price point on busy road. This is a rehabable product, and it needs to be a rehabable price in order for us to hedge our bets and insulate us from the risk of a continued softening.
Yeah.
So that's what it is. And she was like, well, it's a little lower than what I thought, but I understand. I get it, So, people are reasonable most of the time.
Yeah.
Most of the time.
Yeah, most of the time. And when they're not, then it's just not a deal, as you said. Like, not everything is a deal. And we talk to agents about that a lot. When they start wanting to work in this space, they're trying to turn every listing into a flip. And it's like, dude, if they just totally updated the house 5 years ago, it's not a flip. It's a listing now. Yeah. There's no opportunity to add value.
Retail.
Yeah.
Sell it to a retail buyer.
Go move another family in there and take the listing, and away you go. Don't try to fit square pegs into round holes. Don't try to close the unclosable. Yeah. Like, take what it is.
Yeah. And but going back to the very beginning of our conversation, when we do our blast to all the agents in town of the 100 leads we get every day, I would say 90 of them are square peg round hole because they don't understand, or they're sending us an opportunity that the market has seen for 6 months and does not want, right? And all of a sudden we're going to want it because we want to develop, right? Yeah. So I think, kind of bringing this full circle, there's a giant void in the agent community specifically in terms of just understanding real estate in full, understanding the product that you're selling from multiple different angles and perspectives. So anyway, we've been going for a long time. Yeah. We got to go take a tour out in the field too.
Yes, I can't wait for that, man.
Before we do that, for people that want to find out kind of more, follow you, hook up with you and Thatch, what's the best way for them to do that?
So we've got a public Facebook group that is, you got to ask to be a part of, but it's free. It's springboard2wealth.com. You'll see and it's springboard TO, not the number 2, springboard2wealth.com. We have a business page and then a group with about 2,300 members. Click on that, jump in the conversation, or you can look us up at springboard2wealth.com, the website, springboardtowealth.com. Send us a message, get in communication, man. We love to talk real estate. We love to talk making a difference and helping people achieve their goals. I really appreciate the opportunity to come down and talk to you, and I'm glad that we were able to get connected, man. It's fun meeting.
It was random. We sat at the same table at Tarl's event, right?
Yes. It may have been a little calculated on my part. I was like, all right, this guy's doing stuff in Portland. I want to meet somebody else that's doing stuff in Portland. So when I saw an open chair, I jumped on it. I'm glad I was able to take advantage of that opportunity. I love all the stuff that you're putting out. Let me know I can help you. If there's anything I can do to help your community out, please let me know, man. We love what you guys are doing down here.
Appreciate it. Well, I figured this would be a good conversation, and it was. So I'm sure everybody enjoyed it. So
good.
Thanks for being a part of it.
My pleasure.
All right, guys, hopefully you enjoyed that interview with Mr. Marc Erickson. I know I had a great time with him. We actually toured some properties after the fact, showed him some of our projects, and it was just an all-around fun day. So I want to thank him for coming down. Really enjoyed it, and hopefully you guys enjoyed listening to us talk all things real estate. Now, before I get out of here this week, I want to leave you guys with a closing success quote, and this is one that I was looking online, and it's by Mr. Warren Buffett, and it jumped out at me, and I thought, you know what, this is a good quote. So this week's closing success quote is, "Price is what you pay. Value is what you get," by Mr. Warren Buffett. All right, guys, this wraps up episode 237. I'll see you all on the next one.